Hi guys, I'm going to be introducing my weekly analysis in the FX market. How do I trade the FX market? First, I go to the monthly time frame. First, we're going to be looking at GDP USD and USD JPY for today. GDP USD and USD JPY. First, I go to the monthly time frame. When I go to the monthly time frame, I'm only looking for three things on the monthly time frame, which is the key levels. How do I understand? How do I map out my key levels? I just to look for the areas where the market has rejected significantly. Look at this place. The market rejected significantly to the upside and it came back down. The market also rejected here. You can see this is a significant level at this level. You can see this is also a significant level. This is also a significant rejection and this place as well. So that is why I consider this level at a zone. Then the next level is also this level. Look at the way the market rejected from this place, rejected from this place, rejected from this place. So you know that this level is also a significant level and this level as well. So that is the first thing I look at when I come to the monthly time frame. And the next thing I look at when I come to the monthly time frame is I look at candlestick formation on the monthly time frame. Candlestick formation on the monthly time frame. This is a bearish monthly engulfing candlestick pattern, first month and second month, which is a little bit, I'm a little bit worried in this area because once you see a bearish engulfing monthly candle close like this and the next candle open like this, I'm a little bit worried in this area. Although I'm still looking at the overall market, which is going to lead me to the third point I'm looking at, where the market is going to the structure of the market. You can see this is a low, this is a higher low, and this is also a lower low. This is a higher low, and this is also this is a higher high, and this is also a higher low. And this is a higher high, and this significantly is also a higher low. I will assume this level as a higher low. Why? Because this looks to me like a weak rejection. And this looks to me, again, this is also a demand area here. Maybe the market came to test it. The only time I will consider this market as a bearish market is only if I see a close below weekly candle close around this area, around this major zone. When I see a close back down below this zone, then I will consider this market as bearish. But for now, this is still a weak rejection. So I will assume that this market is a fake out. Then the next thing I'm going to look at, I'm going to bring out my Fibonacci. I'll bring out my Fibonacci from swing low to swing high. This is what I'm looking at. From swing low to swing high. From here to here, you can see this level is some kind of a demand level around this area because Fibonacci also coincides with this level. So I believe this level is kind of a push up. This, for me, for now on the monthly time frame, is a fake out until I see a weekly candle close below this level. Then I will assume that this is a continuation to the downside. Then I will come to the weekly time frame. When I go to the weekly time frame, I'm only looking at structure on the weekly time frame. I'm looking at structure. What is the structure that I'm looking at on the weekly time frame? This is not giving me yet a reversal candlestick pattern. Look at this area. You see the way the market consolidated, find this way consolidate. This consolidation is just for one thing and one thing only, just to touch this trend line. You see the way the market consolidated in this area. It's just for one thing, just to touch this trend line. And this market also looking like it's consolidating again is just to touch this trend line. So I'm not seeing anything telling, I'm not seeing a chart pattern telling me that this is a reversal yet. But however, I'm seeing a bullish candlestick reversal pattern on the weekly time frame. This is a bullish candlestick, a weak saw, and a bullish engulfing candlestick pattern is screaming a lot to me. At a major zone, it's screaming a lot to me. Why? Because this bullish engulfing candlestick pattern actually pushed higher and break below the major zone. So this is a reversal candlestick pattern to me. So this I will assume to be an exhaustion on the weekly time frame. I will assume it to be an exhaustion on the weekly time frame. So since I've already established the fact that this is a bullish, kind of a bullish market to me on the monthly time frame, the only time I will assume this is not a bullish market is if I see a weekly candle close back down below this major zone. Then I will assume that this market is a bearish market. But for now, because I'm seeing a reversal candlestick pattern around this area, the market is still bullish for me. So what I'm going to be looking at, if I scale down to the daily time frame and the 4-hour time frame, I'm only looking at how to enter the market. These areas are areas where I look for how I'm potentially going to enter the market. And how am I going to enter the market here? I'm going to put my my entrance level around the daily demand zone. This is a daily demand zone. Not only a daily demand zone, you can see that the market has rejected here significantly. See, 1 rejection, 2 rejection, 3 rejection, 4 rejection, before 4 daily candle rejected around this area before the push up. So I am assuming that this market is going to test this area. This market is going to test this area before I see a push up. I want a consolidation around this area, then a bullish engulfing candlestick pattern. I will be placing this trade for a buy. A consolidation around this area, then a bullish engulfing candlestick pattern. I will be placing this trade for a buy. But for now, the market is still kind of consolidating. So what am I going to be expecting on the 4-hour time frame? I'm going to be expecting a base on the 4-hour time frame. What do I mean by a base? Look at the way the market formed previously. Look, high, low, and when this market wanted to go up higher, it gives you a 4-hour bullish engulfing candlestick pattern. Also look at the formation that happened here. So I want some form of a base around this area. When I see a base around this area and a bullish 4-hour engulfing candlestick pattern, I will be placing my trade for a buy. I'll repeat, if I see a base around this area, like this market is going to push down, then form something like this around this area, then give me a bullish engulfing candlestick pattern, I will be placing my trade for a buy. However, if I see a bearish daily candle close below this level, I will not be entering for a buy. If I see a bearish candle close below this major zone, I will not be placing for a buy. So that being said, my first level target is going to be 197.619, and my second level target is going to be 205, and my third level target is going to be 214. First level targets, when the price gets to my first level target, which is 197.619, I will lock in 30% of my position and move my stop loss to break even. Like lock in 30% of, if it gets to this level, I'll lock in 30% of my position, move my stop loss to break even, and leave the trade to roll. But I might be adding more position from this second level. I just want to see a clear consolidation for another position that I'm going to be adding. However, if the market decided to give me a bearish daily candle close around this area, I will not be placing another position. In fact, my other position that is left, I will be locking in 80% of my position. If I see a bearish daily candle close around this area or around this area, I will be preparing myself to close 80% of my position and just allow the market to roll. So my criteria for going out of the trade is if at any point in the market I see a bearish daily engulfing candlestick pattern, I will be closing 80% of my position. Let's go to GDP USD. GDP USD and GDP DPY. GDP USD is kind of similar to GDP JPY. However, the consolidation are kind of different from each other. So any market that you're trading is still the same process, the same analysis. You go to the monthly time frame. Once I go to the monthly time frame, I see where the market has rejected significantly. I place it at my major zone. One touch, two touch, the third touch, fourth touch, fifth touch. I place it at my major zone. I go to the next. I see where the market has rejected significantly. One touch, two touch, three touch, four touch, five touch. That's going to be my next major zone where market has rejected significantly from. Then this level is going to be my next major zone. So what I'm going to be looking at in GDP USD, I'm going to be looking at structure. The second thing I'm going to be looking at structure. And if you look at this very closely, you can see something. This is looking like a left shoulder, like a head, and like a right shoulder. And this candle has basically broken out. It did not break on the monthly time frame. This is looking like a candle close. So this is saying a lot to me. And the monthly candle has opened with a wick downwards and it's pushing upwards. So I can see an inverse head and shoulder pattern on the weekly time frame. And I'm going to draw out my Fibonacci from swing low to swing high. Wait, what's wrong with my Fibonacci? Fibonacci from swing low, from swing high to swing low around this region. So you can see Fibonacci is always the last line of defense. So it has actually broken out of the Fibonacci. That's actually broken out of the Fibonacci. So what I'm going to do is this. My next level target for this for GDP USD is going to be this green zone around this area. So I can see a potential inverse head and shoulder pattern on the monthly time frame, which I'm going to put into consideration. When I'm coming to the weekly time frame, I'm also looking, what am I looking at on the weekly time frame? I'm looking at the structure. Remember, on the monthly time frame, we saw an inverse head and shoulder pattern. On the weekly time frame, I'm also going to be looking at structure. Structure means I can also see a structure here. Like, remember on the monthly time frame, we talked about the big inverse head and shoulder pattern. On the weekly time frame, I can see a smaller inverse head and shoulder pattern at this region. We can see the head, we can see the left shoulder, and we can see the right shoulder around this region. So this basically is a retest of the neckline. Although it broke back inside of the consolidation. However, I can see a weekly bullish engulfing candlestick pattern at this level. So this is actually a retest. This is actually a retest of this neckline. Since this is a retest of this neckline, I've already established the fact on the monthly time frame, we can see an inverse head and shoulder pattern. On the weekly time frame, I can also see a breakout of the inverse head and shoulder pattern and a retest. I will assume this one to be a retest of the neckline, although a little bit of fake out, and a bullish engulfing candlestick pattern. So when I come back to the daily time frame and the 4-hour time frame, what I'm going to be looking at is how to enter the market. How? I'm going to enter the market. So if I want to enter the market on the daily time frame or on the 4-hour time frame, what I'm going to be looking at is I'm going to be waiting for the market to give me some form of a consolidation like this. You see this consolidation that happened here, it took 12 to 14 days to form. You see this same consolidation, it took 12 to 14 days to form at this level. So what I'm going to be waiting for is the market to give me a consolidation like this or like this. Remember, after 12 to 14, not 14 days, 14 candles, 4-hour candles, I think, 4-hour candles, uh, 4-hour candles, for 12 4-hour candles formation at this place, then 12 to 14 4-hour candle formation at this place. So I'm expecting the market to give me another 12 to 14 4-hour candle formation at this place, at least to retest this trend line as the third touch of the trend line. So what I'm going to be expecting is this: after like 12 to 14 hour, 12, 12 4-hour candle formation, I'm expecting a bullish engulfing candlestick pattern just like this one in this area. 12 to 14 hours, 4-hour candle, I'm expecting a bullish candle formation at this level. Look at it, bullish engulfing 4-hour candle formation at this level. That is also what I'm looking at in this place. So I want to see a retest of this area with a bullish engulfing candlestick pattern. I will be placing the trade for a buy. I will be placing the trade for a buy. I will be placing this trade for a buy. However, if I see a daily candle close back down below this level, I will not be interested in buying this trade anymore. Daily candle close back down below this level, I will not be buying this trade anymore. So if the consolidation has happened here, my first level target for GDP USD is going to be at the 100% retracement. And the 100% retracement of this move is going to be 1.30116. And if it breaks the 100% retracement, it's going to be 1.31386. But if at any point in this market, if I see a bearish daily engulfing candlestick pattern, I will be closing my trade, 80% of my position, 70 to 80% of my position, I will be closing my trade. If I see a bearish daily engulfing daily candlestick pattern, I will be closing 70 to 80% of my trade. So that's the end of my analysis for today.